just a little background on myself. I am Roody, aka Roodgally Senatus on ImpactAlpha, and I lead our coverage of the ownership economy, which I like to say is the most exciting beat right now. Yeah, we have an amazing track for you guys. The Justice and Economic Prosperity for All track, I gotta say, is the best track, all right? Don't tell nobody. Because in this track, we're gonna learn how AI is transforming work at a time where college graduates are struggling to get jobs and enter the workforce. We're going to learn about how indigenous leaders are creating pathways to wealth and ownership for their communities at a time where DEI is under attack. And we're going to learn about how employee ownership is helping employers cut a share of the value that their employees create for their businesses in a time where, frankly, there is low engagement amongst workers, and U.S. social safety nets are being rolled back, and ownership, being an owner in a business and an asset, makes people feel empowered. So I'm really excited to dive in with all of you. And I know this panel is too, so I'd love for them to introduce themselves and maybe tell us a track or a topic that they're most interested to dive into in this track.
I'm happy to start. Hi, everyone. My name is Fernandez. I'm a director at Recast Capital, a platform that both supports and invests in emerging managers in venture. Very excited for a lot of them today, but in particular, the indigenous-led solutions and impact finance really sounds incredible and interesting. So hopefully I'll see some of you all there.
Hello, everyone. I'm Sabari Raja, managing partner at JFFVentures. We are an early-stage, impact-focused venture fund. We have a very particular thesis focused on investing in technologies that support economic mobility for middle to low-wage populations. My background, I'm an exited founder in this space, and it's interesting to be on the investor side, sort of supporting founders that are trying to solve these problems.
Yeah, so excited to be here, Roody. Hello, my name is Curt Lyon. I'm the Executive Director of Transform Finance. We're a nonprofit organization that does research, education, and advisory work with all of the stakeholders in the impact investing space, really trying to advance models that shift wealth, power, and who really has control over the economy. So with that, one of the topics that I'm really excited to see really central in this track is ownership and all its different facets. There's a lot of really interesting and unique angles on how ownership and governance and democracy is integrated into how we deploy capital. One of the sessions that, also shameless plug, my colleague Julie mentors on, has to do with political power and collective governance. That's tomorrow morning, which is a really interesting and so important angle when we're thinking about these ownership strategies, to think about how we can kind of make them more permanent through power building.
Yeah. Okay, let's dive in. I don't mean to sound cliche, but I think we are at a critical moment in history where future generations will point back at this time and refer to it as the time where this impact investing industry stepped up to fill in critical gaps of capital, where government leaders are prioritizing tax cuts for billionaires over healthcare for low-income families. Or they'll refer to it as the time where this industry lets slip away one of the biggest opportunities to take to new frontiers what it truly means to invest for impact. And so I'd love, I'll start with you, Caroline. I'd love if you could just share a little bit of what you're seeing in your lane, and how are you stepping up to meet this moment?
Yeah, definitely a daunting task right now, but at Recast we're trying. It is a challenging environment, fundraising in venture right now, in particular for women and non-binary led funds. And that's who we support throughout our platform, in particular our catalytic side, the Accelerate program, where we work with different funds across their journey, trying to help them fundraise more quickly and more efficiently. It takes women-led fund managers usually twice as long to raise their fund. So to give them the resources is a place that we're really honored to and hoping to step up in that way.
By the way, Recast Capital is doing amazing work in the space, you all. Their accelerator program for women-led ventures. I mean, what was it, just a few weeks ago, you announced the latest cohort of your Accelerate program? Can you tell us about that?
Sure, yeah, that's so kind of you. Thank you. We're on our third cohort right now of this program. We've worked with, in total, about 11 different cohorts and more than 160 different funds, 80% of which have at least one GP that's a woman or non-binary, 60% underrepresented population.
And I know you're an LP, right? And at ImpactAlpha, we've dubbed LP for leadership potential, because there's an opportunity for leaders to come into space and provide capital. What does leadership potential mean to you in this moment as you're looking at these underrepresented managers?
It's a great question. It's a big and it's a real question as well. Leadership potential in this moment is it's putting more capital in different kinds of check writers, right? So right now, still in venture to this day, only 20% of those who actually have the power to write checks are women. So thinking about where the capital is going, and sure, women are in venture, they're in finance more and more, but to actually put the power in those check writing positions is a place that we feel honored at Recast to have that leadership role and to really just more diversify the face of venture capital. And representation is so huge, and I can talk about this perhaps a bit later, but to be able to be in a place where we can uplift these managers. And not only are we doing this because it's impact focused and we're a women-led team, but looking at the returns in the data show that these underrepresented firms and GPs outperform as well. Yeah,
so there's work to be done.
Yep.
Sabari, I'd love to come to you now because you're working in economic mobility, which I think is the bigger umbrella that covers things like ownership and access to capital and workers and all those things. I'd love for you to talk about what you're seeing in your lane and how are you stepping up to meet this moment?
First of all, I can relate to what Caroline said. I'm an emerging manager, so thanks to people like Recast, right? So there's a lot to unpack here, so I'll try to do my best. We have a focus thesis, like I said, we're investing in the economic mobility of middle to low wage workforce, and this is sort of an unprecedented time because AI and automation is completely transforming future of work. So first when I started this work, I looked at the stats and I said, well, what is the percentage of workforce that falls under this category? What do we mean by middle to low wage workforce? This is people earning less than $45,000 a year. Surprisingly, or not so surprisingly, that's 45% of the total workforce in the US. This is your retail frontline workforce, your manufacturing frontline workforce. These are teachers, nurses. So that population is pretty huge. And if you think about this moment in time where AI is reshaping the future of work, the most vulnerable populations that are going to get left behind are these workers that are under-resourced and really are not at the cutting edge of getting upskilled and reskilled into these newer technologies, right? I have some stats I wanted to share, like 85% of workers will see their tasks automated and 70% of job skills will change by 2030. So how are we preparing this workforce for this future? So that's kind of the inclusion challenge that we're seeing, right? So we, as an early stage venture fund, we're not just looking at technologies, but we're seeing how does this technology move the needle for these populations? Is it creating more bias? Are we creating more bridges than barriers, right? But the third thing that we often talk about AI as a technological shift. But if you really think about it, like AI, it's an infrastructure challenge, right? Like all of this AI technologies are creating so much demand on the data centers. So if you look at that industrial side of things, these data centers, like if you just look at the utility workforce, like 25% of the utility workers will retire in the next 5 to 7 years. So as like the data demand is like increasing, how are we actually staffing that workforce? This is where there is a big skills mismatch. There is a talent pipeline gap. And then another angle to this is majority of this population, like I said, is aging. So how are we actually, combining the skills mismatch with the aging workforce? And then now there is like this huge reshoring momentum in the US. So all of these sort of collide and creates a sort of a unique situation where we now have the opportunity, like the way we look at the opportunity is we're investing sort of at the intersection of AI and talent and infrastructure. We often kind of don't talk about the infrastructure piece,
Right.
And that's a big
Right.
portion of the workforce as well.
Yeah, I love that. And as an emerging manager, as an underrepresented manager, we know how difficult it is right now to raise capital. I mean,
Yes.
Caroline pointed to it very briefly.
Yeah.
I'd love for you to talk about your capital needs and what that would allow you to do at this critical moment.
Yeah, and definitely as an emerging manager, it's been tough. We've actually come up with some unique sort of structure. That's a different conversation for another time. Like JFF stands for Jobs for Future. JFF in itself is a large nonprofit organization, and we've spun out JFFVentures LLC as an independently operated venture entity that allows for us to really sort of tap into some of the PRI dollars from the foundations. That is the way we are thinking about raising Fund 1, where 80% of our dollars are coming from PRI, which allows us to build track record for Fund 2. So we're raising a $40 million fund, and it's been 18 months, and we're at 27-ish at this point. So I think your question was more like what the challenges are, or
Yeah, so you're about a quarter of the way in your
more than
fundraising,
a
right?
yeah.
So there is a lot more to go.
Yes.
For allocators in the room, what would it mean to invest in your fund, especially in a time where, I read the news every morning, and some big tech firms is firing low-wage workers, essential workers, and replacing them with automation and AI. And you're right at the intersection of that, and you're adding an infrastructure lens, which is also very critical. So your work is really important. Just how important is it to go out and deploy capital right now to
I mean, right now, we are seeing our pipeline of deals. It's pretty huge, right? Because AI has allowed founders to build quickly and sort of go to market rapidly. That is an opportunity and a challenge, because every day, everything we see is an AI solution. Like, what is really a wrapper versus what is something that's really creating a real moat? It's very hard to sort of separate those things. So for us as a emerging manager, plus the main challenge is being an impact investor, we feel, impact investing has come a long way in the last decade, but we feel like we're still sort of educating the field. So when we go out to raise dollars, for us, we've been fortunate to have a good group of strategically mission-aligned LPs at the table. So that is what I would tell the room, is that there's an opportunity, like together with our LPs, and we have a platform that is a 40-year-old platform, we have an opportunity to really continue to reshape and shape impact investing. So what I would finish by saying is, we are trying to communicate that impact is not a risk. Impact is an enabler. Today, any of these companies solving problems, it's not just the technology. The outcomes are directly related to revenue growth. It's not the impact and the revenue growth is not entirely different buckets. So that's what we are trying to educate the market, and we have an opportunity to do now with the right set of LPs, the right national platform, so we can continue sort of, enabling impact founders to build like really innovative solutions and bring that sort of commercial VC plus impact into the same room.
Yeah, I love what you said just now about impact is not a risk, impact is an enabler. And I'd love for everybody in this room to think about what that means for your own work. What is your impact enabling? So that's some food for thought. Curt, I'd love to go to you now. And we've connected a few times this year because your reports and webinars have held up much of my reporting on the ownership economy. I'd love for you to talk about what you're seeing and how are you meeting this moment.
Yeah, I am picking up so many, currents that go throughout all the different impact areas, that, the three folks here and your work, Roody, all represent in their work. Really thinking about, I think that the theme and the trend that I'm really focusing on is how are models that have been pioneered and, demonstrated in different ways now coming to different markets and trying to really unlock new sources of capital. So Transform Finance, a big part of our work right now is, as I mentioned, on the ownership economy. So we look at funds that are helping businesses convert to employee ownership or other kinds of alternative enterprise ownership forms. There's a lot of really interesting and powerful models that are being experimented with right now. We often call it a Cambrian explosion, to use the evolutionary biology term, where there's a lot of new and exciting things that are being tested. And the ways that these models are being tested is not just, okay, from an impact perspective, let's see, what does it look like when we give, multiple stakeholders governance in the company as compared to just employees? What does it look like when we shift from, a profit share model to an asset appreciation model? It's actually, kind of broader than that. How do we find new segments of the market to apply these principles to? And we also are seeing this in the real estate and real asset space. There's a lot of really exciting work around getting community organizations, residents, tenants, and buildings the opportunities to own the buildings that they live in, that their businesses are in, that they shop at, that bring value to their community. And there's different types of models are emerging to give those different opportunities to non-traditional stakeholders to really take control over their development and their built environment. So there's a Cambrian explosion in that space as well. The thing that I am really, I don't want to say struggling with, but it's really kind of solidifying is, impact can be an enabler of revenue in some of these cases. I think there's also another set of these kinds of models where a catalytic investment and kind of a coordinated field-wide focus on catalytic investment can get some of these models to market rate and kind of push them out of the nest where now they are participating in markets without the need of philanthropy, without the need for different kinds of blended and subsidized capital, or to some degree, but they're kind of not in this kind of incubatory phase. Is that a word? I don't know. But the important point that really is sticking out to me is that there's a set of these models that are really powerful, really transformative, that I think are always going to need some kind of subsidized capital, some kind of concessionary or catalytic capital, and that's okay. I think as folks in the investor space, it sometimes requires a bit of a deep breath to say, oh, maybe there are some things that always will require paying for impact. And I think the question is, how do we set up for the long term the infrastructure so that the impact is paid for? Sometimes that might look like piloting models that local or state governments can actually support. Right now we're not looking at any kinds of models that are getting federal traction outside of, we can talk about employee ownership. There is some bipartisan support. But I think some of the timeline to scale actually looks like proving some of these models to get different kinds of tax incentives, subsidies, programs that can be kind of unlocked and tapped into for these emerging impact models. So long term, I encourage folks to think about those three different buckets, kind of across this impact and return spectrum or continuum, and just notice when you're making choices around which bucket you're backing or which one you're supporting, and thinking, okay, how can I use my capital to really help these kinds of models persist in the long term?
Yeah, Curt, and I know one of your most recent reports was around entrepreneurship through acquisition, which is heating up right now, not just in the US, but in Canada as well, and has grown significantly. And I think in your report, you introduced social entrepreneurship through acquisition. So I love when you guys add these little segments in your report where you're essentially looking at these models or these financing mechanisms out there that are helping creating opportunities for entrepreneurs, for workers, and you break it down in a way that this industry understands it. I'd love for you to use that example to just talk about the opportunities that you're seeing in your channels for this space.
Yeah, well, this would be also a great time to plug another session later today in this track on entrepreneurship through acquisition and employee ownership, which is, I think, a really innovative combination of strategies to produce impact in the succession market. And to me, when I think about entrepreneurship through acquisition, which, for those who aren't familiar, it's a model of supporting entrepreneurs to actually acquire existing companies and take over leadership as and a lot of these models are kind of competitive with some of the other models or kind of like private equity style acquisition models, but there hasn't been a ton of focus on using that transition in ownership as an impact opportunity. And so thinking about, okay, what in this market can be actually used as a lever for implementing new strategies, new kinds of procedures and practices, getting leadership into companies from folks who don't often have access to those leadership opportunities. There's actually a lot that opens up when thinking about this. And at Transform Finance, we're thinking more broadly than just entrepreneurship through acquisition, and thinking about the M&A market, successions. If we think about family-owned businesses where, for multiple generations, there's been leadership in a family, and now it's passing on to the next generation. That's another shift in ownership opportunity that is really important to think about. How can that shift be an opportunity for impact? And I think a lot of this has to do with really working with the individuals who are in the position to take over some of these companies and figuring out, what matters to them, where their values lie. How can they support the employees and communities that make their companies great?
Yeah. I'd love to get into opportunities for collaboration, because I think the challenges were always there, but now they've been amplified, and there's more. Oh, Lord, I'm thinking about rising inflation and rising unemployment due to slow job growth. I'm thinking about the fact that homeownership is out of reach for a lot of working class Americans. And I could go on and on and on. So what are opportunities for this community of impact practitioners to work, say, directly with you guys or alongside you to amplify your impact and their impact? Yeah, whoever wants to go first. I get Caroline if you want to go first. Or
I'm happy to. That's a great question. Opportunities to work alongside us. You're absolutely correct that there's so much right now that feels like it's weighing us down, both individually and collectively. I try to be an optimistic person by nature, and there's always ways to lean in this kind of work. So if you're not in venture capital, you can still be uplifting women in your industry. That sounds perhaps a bit silly and cliche, but it really is so important to be able to do so. I can think of more, but I want you to.
Yeah, no, so very quickly, for us, our biggest differentiator is that we do have a platform to enable these partnerships. I mean, we're supporting like super early stage entrepreneurs. So our lens is always, we're saying many of these entrepreneurs are coming to the table with their lived experiences, first-time entrepreneurs that really don't have much social capital. I mean, I was one such founder a long time back. So the goal is how do we really create that social capital for these founders. So one thing we've done is we've launched the Corporate Innovation Council, which is like HR and learning and development leaders from Fortune 2000 companies that have come to the table to form this council to support these founders. So I think those are the type of partnerships that we envision. We're similarly looking at a higher ed council. If you have investment and operating experience, how can we create that sort of founder to founder, office hours? So there's so many different ways, from providing sort of the moral support to operational support to actually creating social capital and access to opportunities for our founders. So there's many ways to collaborate along the spectrum.
I have maybe a weird sense of what collaboration looks like, but what I really want to invite people, if you want to come chat with me after this or get in touch with Transform Finances, I actually want to hear about people's problems when they think about some of the ownership models that we're looking at. To me, I think we need to build bridges between some of the niche impact spaces that exist all across the campus here today, and reach new partners and new opportunities to actually say, hey, maybe there's ways to blend models. Maybe there's ownership opportunities in some of the climate investment or ocean investment spaces. And I think it's really helpful and it's really clarifying when we hear, I've heard about this model. It's really exciting. It sounds like something that everyone could get behind, but I just can't do it because my check size is $10 million and I haven't found a fund that could take that. I think we, and this is something we do, we try to document, what are these different barriers for these different types of investment partners to getting into these spaces. But I think if we all shared our problems more, maybe we'd have a better sense of who our potential partners are.
And I think for us at ImpactAlpha, we're putting what we call a playbook for shared prosperity. This playbook will be filled with a set of plays, strategies that are creating wealth for communities and people who have historically been locked out of access to such wealth building opportunities, from employee ownership to access to capital for underrepresented managers to workers, working class people in working class places. So of course, please come see me. Always happy to collaborate and hear all the amazing plays that you guys have that will fill our playbook. So that's one way that we're looking to collaborate with this amazing community at ImpactAlpha. Now I'd love to get into some examples, and again, Caroline, I'll start with you. At Recast Capital, you have such an amazing community of managers, of women, non-binary managers, and your latest cohort. I saw some of my coverage, and it's including 68 Capital, which is a Black woman-led VC. Just talk about some of the work that your group of managers are doing, and how you guys are providing critical capital and support to help them to meet the moment.
Yeah, of course. Well, it's a fantastic group. If you haven't had a chance, I'd encourage you to look at the list. This year, 18 different funds, women-led funds, are in the cohort. I could brag about them all day long. 68 is a great example of it. We have GPs in the community who not only came from more traditional venture backgrounds, but were operators and exited and have so much knowledge to give to this space and so much expertise and are doing so many badass things, for lack of a better term and phrase. One of them being Leslie Feinzig from Graham & Walker. She previously had Female Founders Alliance. It's a huge collection of women who are founders looking to put their capital to good use, and now she has her own venture fund with a focus working with women founders and different women in the industry in the space. I mean, it really is amazing, not only to see them individually, but then also collectively and how they come together. You think of, perhaps, hopefully not, but sometimes, women in finance, it can be not collaborative, but this group really believes in the power of community and the power of collaboration. We can really go so much farther together, and the Recast community shows that, and it's so inspiring. I think it's inspiring for all of us as well to come together, knowing that we can do so much more when we put all of our resources and assets together in that way. You know, another example, even they're sharing deals, they're sharing LPs. It's yeah, a really beautiful, especially right now in this moment, to see folks coming together and stronger together.
Yeah, I love that. What about you, Sabari?
Examples are my favorite part of every panel. So I think this, with this new fund, we've made 6 investments. And one thing is, we do take a holistic view of how we invest. We invest along the journey of the worker. So first, it's like, what skills do they need? Once you have the skills, how can we give you access to quality jobs? Once you're in a job, what do employers need to support your upward mobility? But most importantly, what do they need outside of work to thrive at work? Because this population, the barriers to advancing and thriving at work often is lack of childcare, lack of transportation, lack of access to credit for non-traditional pathways. So that's kind of how we invest. So one quick example is our first investment out of this fund is Pace AI. So if you look at the segment of this population of the low-wage workforce, a good percentage of them are ESL learners and workers. Their biggest barrier to advancement is language. It's not even where they know English. It's not about acquiring English language skills from 0 to 1, but it's understanding technical English to actually complete a course or to actually thrive at work. It's all sort of stacks up, right? If you're not able to first qualify for a course because of your low reading level, and if you qualify, you can't complete it. If you don't complete it, you don't get into that job you want. So we're trying to sort of address that. So Pace AI is the first of its kind AI agent that is helping ESL learners understand and comprehend technical content at the point of learning. So immediately improving their reading level. Think of somebody who's an ESL worker going through a nursing certification course. You may know English, basic English, but you don't comprehend vital signs or injury. And OpenLLMs don't translate these things to the learners, the demographics or the learner's level. So that's what Pace AI does. And the founder, Victoria, comes from an immigrant family. Her father came to this country with mechanical engineering background and ended up as a dishwasher at a restaurant. These are the kind of inequities we are trying to address. And she dropped out of her PhD at MIT to actually build this company. So you can see like amazing founders with the right technical chops, with the lived experience, trying to bridge these gaps to build scalable solutions, like all the dots connect, right? And then very quickly, I'll give you one more example because this is another segment of the workforce that is often overlooked when we talk about technological innovations is the small, medium business owners. I'm talking about sort of the Main Street businesses, your doggy daycares, your salons, your HVAC operator, like your funeral parlors. So a large percentage of this workforce works in these businesses. And how is AI transformation how are they actually getting on board with this AI transformation, right? Like, this is a single person owner business. They really don't have the resources or the technical chops. So we've invested in a company called Manifest AI. What they do is they've created a business intelligence, AI-based business intelligence software that's a business companion for the small business owner, which understands the entire business and integrates with everything, understanding how to upskill and reskill the talent, understand what your customers are saying, how is your operations coming along. It's a one-point solution that sits alongside the owner, helping them make sense of their business so they can improve productivity, give better opportunities for their staff. So
Yeah, I love Pace AI. I remember when we covered that deal, and it's a great example of how AI can support workers instead of replace them. So I love that you used that example. Curt, I'd love for you to answer this question from a different point of view, in the sense that I'd love for you to talk about what reports have you got cooking and what webinars should we be keeping an eye out for over the next few months.
Yeah, so one of the big areas of work that we're working on is community ownership in the real estate markets. And thinking about examples, there's a real range of impact approaches and models. So some of these projects are thinking about, okay, how can we as a community take properties, whether that's a residential building, a commercial strip mall, whether that's a commercial corridor that is multiple properties, saying we want to take these off the market and say these are going to be permanently affordable. This is going to be for businesses and homeowners to say, these aren't going to float on the private markets, and that's okay. We're okay with not having those assets appreciate. We want to stay in place. We want to be rooted in our community, and to do that, we're going to acquire these properties. And on the other side, you have some of these models that are looking at investment opportunities for communities, to have equity sharing to tenants and business owners, to have affordable access to home ownership opportunities within these properties. And there's a whole spectrum of these models of kind of like long-term affordability, and on one side, and the other side is this wealth accumulation for communities that typically don't have access to the real estate market. So thinking about these models is undergirding some of the work we're doing right now. So in the next year or so, we're going to have a bunch of materials for community leaders, for lenders and investors in these kinds of projects, and for philanthropy to figure out, okay, how do you take these different impact approaches and put that across the spectrum within a portfolio? What does it look like, to go back to the three buckets I have, to invest in these kind of models from a fully catalytic and fully concessionary perspective? There are some really amazing projects. Like, I would shout out Kensington Corridor Trust in Philadelphia. I know Adriana is here at SOCAP. They're doing really amazing work in Philadelphia in a completely community governed way of doing their own community development. They're currently trying to acquire a $24 million building and are looking to raise concessionary capital to do that. And I believe in them. Adriana gets stuff done. Like, they're going to figure that out. But that is not really a market rate opportunity. On the other side, we have some kind of interesting models in the more conventional affordable housing space, like Enterprise. The CDFI created I believe, $150 million fund that creates an equity pool for their affordable housing investments for the tenants in those buildings. And that looks, pretty conventional for, the affordable housing market, which I would say is not unsubsidized. The government does a lot in terms of tax incentives and providing mortgage subsidies to make those developments happen. But that's something that, kind of more conventional investor can participate in. So there's an entire range of opportunities here, and one of the roles that we want to play is to help different investors find their lane and find the models and approaches that fit both with their impact priorities, what are their goals and the change they want to create in the world, but then also, for specific asset classes, where do some of these models and funds fit in a way that makes sense for them to invest in.
Yeah. We have I know we're going to start Q&A very shortly, and just very quickly, I'd love to ask you guys a thematic question, because economic justice is a key ingredient for economic prosperity. and to me, in my work, in my line of work, economic justice looks like making sure your stories are told when the New York Times and the Wall Street Journals and so on are not covering the real underground solutions, the amazing managers that you're backing, the amazing solutions that you're investing in, the amazing reports and webinars that you're putting together. What does economic justice look like in your line of work?
Yeah, I said it before, I'll say it again. It's putting more assets with women, non-binary-led check writers. And of course, also those from underrepresented populations. You know, looking at purchasing power, who has purchasing power in this country? Some stat like 60% are with women, but then who are the men at VC firms making those decisions? Yeah, there's so much not only impact and economic justice in changing the face of where the funding and capital flows to, but also it makes total sense from a business perspective. So I encourage all of you to look at your cap tables and look at who you're supporting and who you're investing in, and reach out to folks that perhaps don't look like you to try to change the face of venture and bring a bit more economic justice. So as we were saying before, while it's an incredibly challenging environment right now, we still, I really do believe, have the power individually to make small change, but make that ripple effect go far.
I love that. And not just venture capital, but asset management in general. Yeah, I love that. What about you, Sabari?
There's two sort of lens to this in our work. So who are the kind of founders we are supporting? So I think I already spoke a bit about this. It's founders who have the lived experience, who may be first-time founders, but also in sort of venture deserts, right? Like, we're not traditionally looking for investments coming only out of Silicon Valley. We are particularly, we've made trips to Alabama and other areas. We're proactively integrating into those communities, accelerators, and the work that's happening there to find founders coming out of these areas that are often overlooked by venture. On the other side, from a worker perspective, I mentioned the bias that AI can introduce. So when we evaluate technologies for investment, we're particularly looking at how the founders and the team is thinking about reducing that bias and not just leaving it to chance.
Yeah, to me, economic justice looks like agency. I think the economy is a place where a lot of people have the power to shape their own environment, but a lot of people do not. And we know where those divisions lie. Communities of color, working class communities, often in the workplace, in their community, in their built environment, they don't have the decision-making input to really shape what that looks like for them. So I think when you think about input into the economic forces that shape our lives, we really need to think about doing that in a way that is not just replicating the existing divisions of power that we have. So when I talk about employee ownership and community-owned real estate, it's not agnostic to who is getting access to these opportunities. It's being very intentional for giving those opportunities to folks who usually don't. I think to bring another example in is Apis and Heritage, a fund that is doing employee ownership transactions, and they have a very, very explicit mandate for finding companies that have majority workforces of color to give those workers the opportunity to have an asset appreciating ownership in the companies that they've worked at for a long time, because that is usually not something that's on the table. I think that's what economic justice looks like.
Yeah, I love that you brought up Apis and Heritage. They had a session yesterday, and I think they're a great example of an organization that is stepping up to meet this moment. They just had their second close for their buyout fund, $181 million. They're trying to raise $250 million to create over 3,000 worker owners over the next 5 years. And just to compare and contrast, their first fund that they raised 4 years ago was $50 million. So the capital is there. We just have to go and meet the opportunity and meet the moment. Time to get into the amazing questions that you guys have submitted. This question is for you, Sabari, and I love it, and I'm going to provide a little framing around it. Because of this stubborn wealth gap that we have, and because the pathways to economic mobility are so tight, there will always be low-wage workers. And so, what is the best strategy to support economic mobility for workers? Is it a combination of advocacy for higher wages and upskilling?
Wow.
That's a big question.
It's a big question towards the end of a panel. So, but it's an important question. There's not like, of course, there's always going to be low-wage workforce. The goal is how do we bring down that percentage, right? Especially some of the things that we are looking at is, traditionally a 4-year college degree has not been accessible and attainable for this population, for a large percentage of this population. So right now, there is a lot more non-traditional pathways that's enabling that upward mobility. And there is a lot more recognition from employers towards this non-traditional pathway and skills, right? So it's sort of a lot of different stakeholders within this ecosystem has to come together to enable sort of this workforce to uplift them, to get them into quality jobs, into higher wages. So it's not just the higher wages, it's actually quality jobs with benefits as well. So from an education perspective, I think there is a lot more opportunities now. You can go through a boot camp, or you can go through a 9 to 10 month sort of a upskilling course. But there is a lot more work to be done on the employer side to say, how do you recognize those skills when there is a lack of a traditional degree? But I think the needle is moving in that direction, but still a lot more work to be done. And the other angle is that skills-based hiring, right? Like AI is enabling everybody in this ecosystem to better understand the skills of a person. These people, many of them don't have traditional resumes and degrees. So and the absence of that, how do you sort of quantify these skills? And there's been a lot of work done on skills credentialing, but where we are lacking is that it hasn't translated all the way to the employer side. There is interest and engagement, but a lot more work to be done from that end to enable that. So it's not a one thing that fixes this. It's a collaboration and communication among all the stakeholders, from education systems to employers and everybody in between, to make this happen. Right?
Yeah, I love that. Yeah. Caroline, there's a question for you. So it's not just in venture capital that women are overlooked. They're overlooked in the broader capital markets. And if you're thinking even bigger, women-led nonprofits struggle to raise philanthropic capital even. So are you looking to provide capital beyond, say, women-led managers? Because I think there's somebody here who might want to work with you, who
so
maybe
kind.
don't typically fit the bucket of managers that you're looking at.
Sure, that's a super kind and very fair question. We are a venture fund at our core, a fund of funds. That's the expertise of our co-founders as well as our team. So we do not, unfortunately, work with nonprofits right now. Never say never, so don't quote me on that. But I'm genuinely so happy to connect, help, support however I can. There are overlaps, most definitely, in fundraising in general, and then if we want to talk shop or horror stories about women in leadership and commiserate in that way, I'm so happy to always connect with any women leaders, especially in the impact space. But Recast is focused on venture capital funds.
Yeah, and whoever asked that question, come see me after, because I have my eyes in a lot of the deal flow that we cover, and I can point you to a couple of people who are operating in that space. Curt, there's a question for you around ownership structures, which is a little broad. So I'm going to make it a little bit more specific. I'd love for you to talk about your expanding focus on community real estate strategies, and what structures are you seeing out there? As I know, there are, in my own reporting, I see community investment vehicles that allow neighborhoods to co-invest alongside investors and neighborhood shopping centers. I'm talking about folks like Linnea Richardson at Chicago Trend. So what kind of structures are you seeing out there?
Yeah, I have a really, really ugly three-dimensional chart that I'd be happy to share if anyone really wants to get into it. But yeah, as you said, when thinking about some of these ownership structures and the goals that I mentioned earlier, some are more aligned with community investment. So Chicago Trend is this really powerful model where communities can invest in shopping malls or commercial properties. There's a similar model called the Community Investment Trust. It was pioneered in East Portland and is now being replicated in a couple other cities, where communities can invest equity into commercial real estate development, and they get paid back a dividend annually. And for the first few years of that project, the communities were getting upwards of 10% annual returns, which is quite solid when thinking about if you think about it, also risk perspective, like that's real money that these communities are getting from something that they participate in. There's another category of ownership structures using perpetual purpose trusts, which is kind of like a hot topic term you probably hear in a bunch of different spaces now. Happens in employee ownership and different enterprise models as well. But on the real estate side, when assets are put into a perpetual purpose trust, it allows the communities who are shaping the vision of that project to have complete control over, how much the property is going to inflate in value over time. It allows them to set the governments. It allows them to put different types of assets into one trust. There's this model called the Mixed Income Neighborhood Trust that Trust Neighborhoods, a national organization, is stewarding in multiple cities around the country. That essentially creates a portfolio of mixed assets where some are market rate, and those market rate properties subsidize the community-controlled, permanently affordable housing units that they have in the same trust. But all of that has a community governance that's set out by the trust documents that kind of create the model itself. It's very customizable. I think that's a really powerful trend that we're seeing. And something that makes the space a bit confusing, honestly, is that a lot of communities have different goals and are really structuring some of these models in very innovative ways from the ground up, which creates, again, going back to this idea of the Cambrian explosion, a lot of different models that are worth exploring and seeing, okay, what fits and what sticks in different markets.
Yeah, and I'd love to add one more, which I really love. Does anybody here know Rock USA? Oh, great. So Rock USA is going around communities across the country, resident-owned communities. Think about mobile parks. And a lot of these mobile parks sit on land that they don't own. And the owners of these land are raising rents just at a crazy rate on these communities. And at the same time, you have private equity firms that are coming in and buying portfolios of these mobile home park communities in bulk. And as you know, the private equity model is oftentimes extractive. And so Rock USA is coming in and forming co-ops of mobile home parks, allowing these communities to buy the land upon which their mobile homes sit, so that they can take control of the land and also benefit from the wealth building that comes with it.